So tech stocks took a hit today, and this time it's not because of earnings or because of the AI hype cooling off. It's because of the administration reportedly considering new export restrictions on China on US software products from laptops to jet engines to even medical devices. So, in other words, we might be seeing a new front in this trade war. And what we've seen from that is markets weren't happy campers from that. They didn't take that lightly. Today we've seen the Nasdaq lead the decline, dropping around 0.9%. The S&P lost 0.5%. The Dow fell about 0.7%. And it was another reminder that even with optimism around diplomacy, uncertainty still hangs over the global supply chain, and any hint of tightening between both Washington and Beijing sends ripples through tech and manufacturing stocks pretty quickly. All these industries begin to feel that pain, if you will. But the trade headlines weren't the only thing rattled today. So there was a lot of talk about the ongoing government shutdown, which I was completely surprised by this because I guess I zoned out. It's on its second longest record on record at 22 days. I was not even aware of that. I'm reading that and I'm like, whoa, this is getting long quickly. And if it stretches past November 4th, it'll be the longest in US history. And this isn't like past shutdowns, it's far more complete, meaning many agencies have gone entirely dark. And I guess that's it. They're dark. It's in the dark. We're all in the dark. And when the shutdown began back in October 1st, economists were largely calm. They estimated it would trim about 0.1% to 0.2% from GDP growth each week it lasted. But that outlook is now beginning to change. As Oxford Economics put it, there are these knock-on effects on contractors, on these businesses, on consumers that will grow more disruptive with each passing week. And this isn't just about these delayed paychecks anymore. It's all about confidence in the people that have an opinion on what they have confidence in, and it's the economy. So people could lose confidence in the economy and begin saving, and in a way that'll send its own ripples throughout the economy. So each day the government remains closed, more contractors slow operations. Then more businesses feel the squeeze because they're not making more money and they got these people they need to either hire or continue paying. They got to pay for like the electricity bill, taxes, all this stuff. And also like inventory, and then stuff breaks down. They got to get the machine's battery recharge or new wheels. And then more households begin to cut spending because Bob down the street lost his job because he got laid off. And I'm not feeling too secure about my job. Like, it's pretty dang slow at work, but they're still like paying me. So that cycle of less spending, fewer jobs, more layoffs is what economists are now worried could start showing up in the broad data. And if we were getting any, if we were actually getting any, it wouldn't be viewed as this good point. And here's the main problem. So the Federal Reserve is blind to a lot of economic data that they're used to getting to make decisions off of because of this government shutdown. These statisticians have been furloughed since October 1st, and more official data releases have been suspended, delayed. And even worse, the reports came out today on Wall Street Journal that the Federal Reserve hasn't been receiving ADP's private payroll data. They got more of this advanced version of that, and they haven't been getting that data since back in August, meaning that they're looking at the same data the public's looking at, and they lost access to that data long before the shutdown began. So that's just interesting. And the private payrolls data, usually that one's more the negative Nancy out of the two when you compare that to the BLS jobs report that we normally get from the Bureau of Labor Statistics, which it's not releasing right now because of the shutdown. So I'm sure they'll get like this tough looking report, this private payrolls data, which it's smaller companies, it's more there's less what's the word I'm looking for, like less data in that. It's smaller data. And if the central bank has just that to base off of because it's missing crucial information on jobs, on spending, on inflation just weeks before its next policy meeting, I wonder how that impacts, say, the odds that people are placing on the Federal Reserve cutting rates. So right now it's a 96.7% chance we get this Fed cut in October 29th's meeting of 25 basis points. Well, I wonder what happens if they continue not getting data and the government stays shut down to through November. We reach this newer record or whatnot, the impacts on GDP, yada, 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 yada. What happens to the odds of this 96.5% chance that come December 10th, by the end of the year, we get two cuts from the Fed of 25 BPs, 25 basis points. So I'd imagine it'll start even shifting further beyond that. Like, let's say the market starts, like maybe we get this 25 basis point cut. Maybe we get 0.5% cut. So who knows what happens with that. And when the shutdown ends, this data could flood and hit all at once. So let's imagine the government reopens in, say, early November. The Fed could receive the September, the October, and the November jobs reports all within about 4 weeks. That's 3 major employment updates condensed into this single decision window, meaning policymakers have to act fast to interpret whether growth is slowing or if the labor market is simply taking a breather. What's really going on with that? And it's a much tougher scenario to be in. So I'd imagine these CME Fed watch tool rates we were just looking at, we could see some massive fluctuations in this just depending on what happens. And it's almost like a checkmate by Trump to the Fed to cut rates. I mean, I know there's other factors at play. Joel, it's the Democrats. Or it's just a whole bunch of grown adults that can't come up with a single decision and a lot of people are being impacted by that. Whatever it is, it makes it harder for the Fed's job and their forecasting and how they should necessarily react to it. Now, there's few signs of softening that are appearing, so we're getting more and more of that. So more than 4,100 federal layoff notices went out earlier this month before the judge temporarily blocked the additional job cuts. And in the private sector, we see companies are laying off. Some of these tech firms, you got Paycom laying off people for AI purposes. You got Meta laying people off, reportedly cutting 600 jobs in its AI division, affecting teams focused on research and infrastructure. So these are people losing their jobs right now in the midst of everything happening, and economists are watching these numbers. They're watching them closely because even without official reports, the Fed still has other data it could base off of, and the public's aware of that. Like, they could watch these public companies in the stock market. What are they saying in earning calls? How are they doing with with their labor supply? And then indicators like the state level unemployment claims, private trackers from companies like Carlyle, Ravelio, and those show job postings and hiring momentum cooling. So the Fed has other data sources they could base off of, but it's not the data they normally look at, the BLS jobs report, which the public and the Fed, both, and economists, everybody, they place the highest weighting on those BLS jobs reports. So if we got 3 at once, like I was saying earlier, that could be an interesting time. Now, there is one report that we'll get here pretty soon, as early as this Friday, and it's a critical data point that we'll be getting, and we'll see this in just a couple days. So if you go to Market Watch and you scroll down on Friday, October 24th, you see these little stars right here. Well, what those stars say is temporarily suspended data due to government shutdown for the 1 stars, but CPI has 2 stars. CPI will be published to determine Social Security CLOLA, so cost of living adjustments. So the CPI data is really important for cost of living adjustments for people on Social Security earning retirement. And a lot of people are going to be watching that because that is some of the data we're getting, other than, like, say, these earnings reports. It's actual data the Fed's looking at and considering, because CPI plays into the Fed's PCE report, which the PCE kind of bases off of CPI and PPI inflation data. But that's only happening because, like I said, the labor market temporarily recalled the BLS staff to produce the data. They need the Social Security to calculate the annual cost of living adjustments. And economists expect both headline and core inflation to fall similar to each other. For the consumer price index headline number, 0.4% for the month of September is what they're seeing. That's the same as last month. The year-over-year number slightly up from the 2.9% we got last month, but 3.1% this month, or the month prior to September in this case. And same with core CPI, 3.1, 3.1, no change year over year, no change month over month, coming at 0.3%. So it's modest, but it's still above the Fed's 2% target. But a lot of people are going to be wondering, does this come in high? Does this come in low? What about Trump's threatened tariffs on China? How does that play out? The Trump administration placed some heavy sanctions on two of Russia's largest companies for oil production. How does that impact that? How does that impact prices? So the CPI reading could give the market one of the few signals that it's had in weeks, a little bit of clarity in all this mist of uncertainty, and it's likely to set the tone heading into, like I said, the Fed's October 29th meeting, where another 25 basis point rate cut is widely expected. So mainly to recap on today, we've seen tech stocks really slipped on these new trade tensions, rumors out there as far as what could possibly arise from everything. The government shutdown is dragging deeper and deeper into uncharted territory and is completely flying by in a blink of an eye. And the Fed is now operating in the dark. They have been, but come to find out, it's worse than we were expecting. So waiting on that data that's piling up behind the locked doors, it's not a good time for them at the Fed. And that might make Friday's inflation report the single most important data point of this month, not because it changes everything, but because it's the only thing we've got right now. So always stay grounded, everybody. The market's noise can be temporary, but the trends are telling us that the story, if we're willing to listen to it. So everybody, I hope your day has been awesome. Hope your night's awesome. Hope tomorrow's awesome. And I'll see you tomorrow. Have a good one.